All right, everybody. So let's just quickly review some trading opportunities that were available today. The first is the ES on this move down. You see, it's going down. As it's going down, I saw that volume was drying up. So there's no supply. There's diminishing supply, and all of a sudden you have this breakout volume right here. So that's 2.1 times average volume, biggest in 9 waves. So obviously, there's volume coming in and it's higher than the prior 2 up waves. And then we just want to take a look at the background, and you see that there's accumulation in the background, right? Where is it? Right here. You have selling pressure. It has no follow through and does a reversal. So this, when it goes down, and this volume, where's the reward? Where's the what is it called, follow through? There's no follow through, and instead it reverses. So if you look here, it'll show you that the volume increased over the prior bars and then reversed higher. So that's one indication. That's you're putting a puzzle together, and on the wave chart you have a breakout volume on the upside, biggest in 9 waves and all of that. This I call breakout volume because these lines I have, they're averages. So doesn't it look like it broke out? So the lines, the averages, you can almost use like support or resistance, that type of thinking. And if it's significantly above the average, that's bullish, and it is. So here was 2 times the average, 2.1 times, and biggest in 9 waves with lack of supply in the background. And after that, it pulled back and still lack of supply. This was 0.6. That's 40% less than average. What is that saying? They're saying there's no supply. After that, there's a thrust right here that has the most amount of volume, the prior 8 green bars, and that initiated this move up. So price is going up, 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 up. It goes to this resistance levels. I have HR1. HR1 means it's just hourly resistance 1, the first hourly resistance. And from there, from that resistance, you have selling. So again, I'm looking at the selling, and it's 2.1 times average. So there is a clear selling at resistance. Buying support, selling resistance. Buying support, selling resistance. So it went up here from this high and sold off on double the average volume. The logic is the same. The demand volumes are decreasing. Supply increases on 2.1 times average. 2.1 times average down volume with breakouts, with the break of this low, breakout to the downside is a breakdown. And then I just want to take a little check, and I like it when it has that, the build up right here. I believe that's the most amount of volume since this low. From the low, you have 7, 8, 9, 9, 9, 12. That's a lot of volume. Why didn't it break through? It's because someone's selling at resistance. That's the when you have sign of sign of strength and sign of weakness. You have change of behavior. That's a change of behavior when it comes to volume at price. So you have changes of behavior in terms of waves, sign of strength in terms of waves, sign of weakness in terms of waves. Well, this is in terms of a print. That's a high volume print, and after that it breaks. So now price comes up to test. It's very important that it breaks, otherwise you don't know if this is you don't know what this is. It has to prove itself. So it proves itself by price going down, because volume here indicates that they're unable to go higher, and even by trying, they're unable to go higher because someone else is taking the other side and selling. And there's a break, and then there's a test, and this they're selling the pullback. This high volumes have no follow through, and they're selling the pullback. This is questionable. Right here is questionable, but I realize that this volume is just taking price up in order to test. As it tests, selling pressure here, break. And that's all there is, right? So this is selling the test. This is selling the test aggressively to take price down. This is the cause. The effect is the red candle. All right? The cause of this move down is the high volume selling. All right? So that's about it. This was the key indicator. Now, if this wasn't there, I don't think I would have taken the trade. And the reason is because the pullback had heavy volume. See this pullback? When it went down here and sold off on 2.1 times average, look at the pullback. The pullback is it has too much volume. So typically that's a no-go. It means they're buying the break. It means they are buying the break. So why would I sell? And the only thing that kind of flipped my judgment still bearish was this print here, followed by the break. So at least if it tested, it should have somewhat of a down move. But yeah, without these other factors, it's difficult to make a decision because of the demand that came in. So the two things that really helped were the selling in the background, distribution background, and resistance. Right? That really did it. Otherwise, do you want to sell demand coming in? Obviously not. So as soon as it turned here, I guess sellers just came in and bashed it. Look at this, no demand. They tried a little here, selling came in, took over demand, continues going down. All right, that's all, folks. Have a good Friday. Peace.